As you might have heard by now, the Inflation Reduction Act passed last week. It actually does nothing to reduce inflation. However, it does provide the IRS to hire 87,000 new auditors. So I thought I would do a video on some ways to help you avoid getting audited in the first place. So 80,000 IRS agents, that's going to take a while to get that many people hired and trained. However, if you think about a football stadium at a major college, that's the number of people that are going to be coming after you. So it's important to avoid an audit, and if you are audited, make sure that you have all your documentations to back that up. So I was going to provide like 3 or 5 tips, and I just kept thinking of things, so I came up with 8. So please stay all the way through. I'll try to make it quick, but I've got 8 ways, 8 tips that you can avoid an audit with. So the first thing is always file your return on time. Whether you file an extension back in April, the time frame to file that extension is coming up. If you're a business, a S Corp or partnership, those are due September the 15th. If it's a personal return, those are due October the 17th. So always file on time whether you've got the money to pay or not. The second tip is if you're a Schedule C filer and your net profit from your business is $50,000 or more, you should look into becoming an S Corp. S Corps are Schedule C filers are 15 times more likely to be audited than S Corps. So consider becoming an S Corp to kind of reduce your chances of being audited that way. Number 3, make sure expenses are common and reasonable for the industry that you're in. For example, I'm in the tax industry, so my mileage is kind of low because all I can really deduct is when I go back and forth between my offices, if I go run errands, go to the bank, go meet a client. So if I had really high mileage, that might be a red flag, as opposed to somebody that's an Uber driver or a realtor who's going out showing houses. You're going to have a lot of miles, a lot more than me. So just make sure that your expenses are normal and usual, customary for the industry that you're in. Number 4, if you have anybody that works for you that's not really a payroll type employee, but it's a subcontractor, you need to issue them a 1099 in order to be able to deduct that expense. So if you've paid them more than $600, you need to issue them a 1099 by the end of January. So tip number 5 is avoid using round numbers. It's always strange to me when I see a Schedule C that somebody did the year before and all the expenses end in a 0. I don't know if that's luck or they probably just didn't care to keep up with their expenses and just threw some numbers on there. So that's a red flag for the IRS if all your expenses end in 0. Speaking of expenses, the number 6 way is to properly track all of your income and all of your expenses. So whether you do that through an accounting software online or an Excel spreadsheet, make sure you're documenting anytime you spend money that's related to your business. Tip number 7, avoid inflating home office expenses, travel, and dining. So that's an easy red flag. Some people say that the business or the home office is kind of a red flag in itself. I don't think it is. I think if you've got really high numbers on there, it's definitely a red flag for the IRS. So make sure that home office expense, that you are using that home office strictly for business. There's no personal, there can't be any overlap, and that everything, is in line. Nothing's exaggerated. And the last tip is don't ignore letters from the IRS. First of all, the IRS will never call you, so that's a scam. Just hang up. The IRS will always mail you a letter if they need to get in touch with you. But please don't ignore the letters. There's time frames on there for which you have to respond. And I would venture to say that 9 times out of 10, clients come into the office or call after that time period has lapsed. And it just amazes me that they don't feel or don't see the urgency to reply to that letter. Sometimes it's too late and the penalty has already been assessed and there's really nothing to do about it. But if you do get a letter from the IRS, go ahead and respond immediately. If we've prepared your tax return, we'd be glad to take a look at it and see what we can do to help you. So if you have any questions, hopefully this has been helpful for you. Feel free to reach out. I'd be glad to maybe hop on a call, see if there's a way for us to do business together. You can always go to my website. It's dwd.dwightdye.com to set up a free strategy session. I'd be glad to talk with you. Have a good day.